Imagine a tiny button, a small red button. When someone presses it, homes feel expensive, jobs feel shaky, stock markets panic, your EMI changes, your future feels slower. That button is called interest rates, and when it goes up, everything changes. Not a little, a lot more than you think. Here's the strange part. Interest rates don't just affect banks. They quietly sneak into your food, your phone, your rent, your dreams. Microhook. Why does one number control so much? Stay with me. I'll explain it like you're 5. Let's shrink the world. Imagine a small town, only one lemonade stand. You want to start one too, but you don't have money. So you go to Uncle Bank. Uncle Bank says, I'll lend you 100, but next year give me back 110. That extra $10, that is interest. Simple, right? Now imagine everyone in town is borrowing money for houses, cars, businesses, governments. Suddenly, that $10 decides who can buy, who must wait, who wins, who struggles. What if Uncle Bank suddenly asks for $130 instead of 110? Here comes the boss of all banks, the central bank. Think of it like the town's thermostat. Too hot? Turn it down. Too cold? Turn it up. When prices rise too fast, central banks raise interest rates. Why? Because borrowing becomes painful. People stop spending. Businesses slow down. The economy cools. Sounds logical, but here's the twist. Cooling the economy also freezes many people out. Interest rates go up, first domino falls. Homes. Loans become expensive. Monthly EMI jumps. Suddenly, new buyers disappear. Builders panic. Prices wobble. Second domino. Businesses. Businesses borrow to expand, hire, innovate. Higher rates, higher fear. So they cancel projects, freeze hiring, cut costs. Guess who pays for those cuts? When companies borrow less, they hire less. Some fire. Layoffs begin quietly. Not everywhere, not instantly, but slowly, like a leak you ignore until the room floods. People feel unsafe, so they stop spending, which hurts businesses again. A loop begins. This loop has a name. It's deadly. Now meet the scariest character, debt. Governments have debt. Companies have debt. People have debt. When rates rise, old debt becomes heavier. New debt becomes scary. Governments must pay more interest, so they cut welfare, raise taxes, reduce spending. Money that could build schools now feeds interest. Microhook. What happens when even governments struggle? Markets don't think, they feel. Higher rates mean less profit in the future, less cheap money, more fear. So markets fall. Not because companies died, but because hope became expensive. Money runs away to safe places, gold, dollars, government bonds. Risk becomes unpopular, but this is still not the worst part. Here's the part nobody explains. Higher interest rates slow time. Long dreams suffer. Why? Because the future is discounted. If money today is expensive, money tomorrow is worth less. So innovation slows, startups die early, big ideas shrink. People stop asking, what can we build? They ask, how do we survive? This changes behavior for years. Rich people already have money, they earn interest. Poor people borrow money, they pay interest. When rates rise, the gap widens, silently. No alarms, no breaking news, just math. Assets beat labor, money beats effort. This is why society feels tense. This is not accidental, it's structural. People think economics is numbers. It's not, it's emotions. Fear, hope, confidence. High interest rates tell the world, be careful, don't risk, wait. And when everyone waits, nothing moves. That's why recovery takes years, not months. So why do central banks still do it? Here's the uncomfortable truth. Sometimes rates must rise because inflation hurts more. Inflation steals slowly. Interest rates hurt loudly. Central banks choose the pain they can control. They crash the party to save the house. But they never know how much damage is enough. This is why every cycle feels worse. The big lesson. Interest rates are not just numbers. They are a brake, a weapon, a signal, a mood. When they rise, the world becomes careful. Dreams become expensive. Time slows. And everything changes, even more than before.